What's up, traders? Welcome to this week's episode of the Weekly Watchlist. What we're going to do today is do a hybrid model. So just like Wednesday videos, we're going to take an in-depth tour through our broad market. And then just like the typical Sunday videos, we will wrap it up with our core list of companies. What we're not going to do today is take a look at any extra trade ideas. We're headed into a historically speaking flat time of the year. The last 2 of 3 trading years during the week in between Christmas and New Year's was pretty much just flat, exactly that. And there's no real sense in pushing it into the end of the year. It's the last trading week of the year for me. I would prefer to be a little bit more conservative. So with that being said, let's jump over to our SPY weekly chart and kick off this sort of hybrid model, if you will, clearing up the drawing set. There we go. So as we always discuss, right, candle structure and location. Here we go. We certainly have a full-bodied green candle, which engulfs basically the entire range of the prior bar. You can note that the open was well underneath and the highs were on par with last week's highs as well. Whenever you get candles that are stacking up with similar size bodies, you always want to go with the one in front, right? We're not going to read too much into the bearish price action because obviously the bears had their opportunity with the large gap down. The bulls really responded by taking prices back higher. Now, yes, don't get me wrong. We did have a low volume float, which we will discuss as we drill down to the daily. But for now, from a weekly time frame, in terms of location as well, where did we wind up? Kind of right back at this big breakout point. And remember that this is really just starting to turn into a pretty significant bull flag here on the weekly time frame. Just for sort of curiosity today, let's take out our Fibonacci's from the low up to the high, and would you look at that? So the 38.2 is not holding beautifully. However, the 50% retracement is, and we are still getting some lows at or above that 38.2. So it really does check out as that weekly bull flag like we just discussed. Overall, just as a reminder for our trend lines as well, the trend has not even come close to breaking on any of these downturns, right? If we do something like this, we're only going to draw in one today just because, I don't want to waste too much time on trend lines, but we're going to redraw that as channel. We know that we've been watching this for quite some time. We pretty much rebounded off of the midpoint. Obviously, yes, the gap down, but closing right back up towards the upper half of the trend channel. So again, there's no real reason to be overly bearish here inside of your S&P unless this trend channel starts to break down, in which case we know that the horizontal target is closer to 430. Doesn't look likely based on the structure that we're given here on the weekly time frame. So with that out of the way, let's drill down to the daily now. Of course, pop our tradable levels back on, and let's just discuss some rough nuances, right? What I've been saying over the past couple of weeks, or rather videos here on the channel, is that we really don't have direction right now. We just have a lot of volatility, and that's proven by the fact that we're containing ourselves within this box, right? We've come from the top to the bottom to the top to the bottom to the top, right? So we're all over the place. The direction isn't abundantly clear. However, the volatility is certainly still through the roof. So before we get ahead of ourselves, we're going to switch over to the Wednesday sort of model as we usually do and take a look at our sectors, right? See who was leading, who was losing, and where was the weight from Friday. So leading the pack today, ignore this one up at the top, but we are going to look at the XLY for consumer discretionary, up 1.39%. And at the bottom of the barrel, we have real estate, right? Down 0.3%. As we know, that's a good thing to see XLY at the top of the list. It's a fairly heavy weighted sector, just not one of the top 3 we look at. And of course, real estate being more defensive, it's good to see as you get a green day in your marketplace at the bottom of our list. So what are the heaviest weighted sectors, right? We're talking about the XLK for the tech sector, heaviest weight there, up 0.56%. That checks out fairly, it's not as aggressive as it could be, but still not bad. XLF for financials is second, just underneath at 0.52%. And then XLV for healthcare just under that as well. So kind of nice how they've stacked evenly here, only up 0.41%. So let's check in on these charts and just make sure risk isn't mounting in one place versus another. I would say the XLK continues to look fine. Remember that we did discuss that, it's okay. It's not great in the last Tuesday video. Remember, we had the short and trading week. For now, what it's going to be about is this resistance trend line, right? If you come in from here, do something like that. The question is early on this week, do we break this and move back up to the highs, give ourselves that higher high, then we can afford the higher low pullback, or are we going to start, respecting this resistance trend line, come back a little bit, and then give it a reattempt, right? So to me, XLK, it's not the end of the world here. Even if we did pull back, remember that we're coming up off of these lows in here. It would be okay for a little bit of a healthy pullback, reattempt break, and then maybe up to those highs as we just discussed. The main thing you don't want to see here in the XLK is a re-break of this support trend line, right? We gap down underneath it, immediately recapture it the next day. So I would say it's okay for now, but if we do start violating that again, that's where it's, becomes more likely we move back down to that all important level at 164. So XLK for right now, it's fine. It's not fantastic, but it has potential to be fantastic if it does do something like that for a higher high. Next up, we'll move on over to our XLF, which of course is financials, still the pain in the side of the S&P. Now, don't get me wrong. Yes, we did support here. We did make the move all the way back to the top end of the range. However, we're still not above that resistance trend line. Remember that that's really our line in the sand right now. And based on Friday's candle structure, right, inverted hammer here on the gap, not looking so great. So to me, financials do have a possibility here to resist here at this zone of resistance. We've talked about its importance in the past. And if that happens, right, we're just looking for a gap fill. And then the question becomes, do we get a gap fill reversal? So just a higher low pullback from this aspect right here to here. And then if that holds, a reattempt really needs to start breaking that and clearing us up towards that 40 or a little bit north of that 40.10, somewhere in there from these highs, to get the XLF back on track for being a good thing for our S&P and not so much of a drag. So as of right now, I still do believe that there is risk in your financial sector based on the location and structure of Friday's candle right there. Okay, so that's the financials in a nutshell. Let's quickly take a look at rates just because why not? And really not doing a whole lot, right? Just as we've talked about in the past, stabilizing here, which is a good thing. It's not going to be too much of a factor for your XLF or your XLK. If this really starts trending, that's where it starts to become more of an issue. We know that lower is good for your XLK, and we know that higher is good for your XLF, and obviously vice versa in each of those instances. So just keep an eye on it and that relationship as always. Now let's wrap up our sectors with our XLV for the healthcare sector. And would you look at that, just a thing of beauty here. So we did get the higher low pullback and obviously made a new higher high. We didn't close at that high, but certainly a new higher high here in your healthcare sector. So that's fine. It does check out as bullish as well, being a heavier weighted sector. I would say things are all good here inside of healthcare. We can remove that resistance trend line now. I would also say that that is pretty much going to be here our major low that we want to see respected from that pullback there at the 135.21. So XLV not seeing a huge threat to your S&P 500. If it pulls back this time around, it would be ideal if we held up here closer to 136.85. Okay, so that's sectors in a nutshell, at least the heavier ones that we're typically looking at. Let's take a look at the VIX now. And zooming in on this chart a little bit, you can clearly see, obviously with the market rallying, just a complete collapse in volatility back down underneath 2050. However, as I've discussed in the past, it's not like we're down at the 15 floor. I do still believe that there is a fair bit of volatility in the marketplace. And, if you were to split this up into thirds, we're moving into the middle third. So we'll call that section 2. Here's 1, 2, and 3. So we're in section 2. So volatility is, higher than, as low as it can go, but it's also not as high as it could have been like it was in this section of the chart. So just remember, still keep your targets and stop losses a little bit looser. If this is your structure, entry, of course, we'll put this as T target, stop down here. If that's typical, maybe your entry stays the same. Your target's just a little bit higher and your stop's still just a little bit looser because we're not down in section number 3. That's all here inside of volatility. But if we look one more time behind the curtain at the VVIX, what's sort of concerning about this one is the fact that we're only at the 120 handle. And we know that that's really the trigger point here where we're going to start seeing massive swings in the VIX itself. So unless this can start breaking down underneath 120, I do believe that the VIX itself has the opportunity to get back up over that 2050 area. So just keep an eye on it. If you want to set an alert at 120, if it starts falling underneath, that we're quote unquote, and I say this word very lightly because there's nothing really safe in the marketplace, but quote unquote, we're safer if this starts to fall underneath 120, right? So that's volatility in a nutshell as well. And then we'll of course follow up with our S&P stocks that are trading above their 200 SMA. And what I wanted to point out here is that on this week's rally, we certainly saw an uptick in the amount of stocks that are now trading back above their 200 SMA. However, really, this is going to fall off of our radar until it starts breaking the first resistance trend line. You can see I have an alert on it for when it crosses. If it's to cross, I will bring it back up in future videos. But as of right now, just bear in mind that a majority of stocks are trading underneath, or not a majority, I guess, because we're above 0.5, but we're certainly trending towards half of the stocks in the S&P above and below our 200 SMAs on the daily time frame. frame. Again, for future videos, I'll only bring it up if it crosses up and over that resistance trend line. So that's your S&P kind of in a nutshell. What we're going to do now is take a look at the internals for the S&P 500. If you're not familiar with this screen, get familiar. Top right-hand corner will tell you what this is all about, how to set it up, and how it'll help you make better intraday trading decisions. So with that out of the way, we can certainly start to read into our volume. Pretty significant there on Monday. A lot of outflow, but look at what happened on Tuesday. We discussed this on the Tuesday video, actually. Just a huge amount of high degrees of correlation, right? And that, generally speaking, is not sustainable for the marketplace. Again, just in opposite directions, they kind of cancel each other out, correct? You can certainly see that in your advanced decliners as well, right? Below the negative 2,000 and above the positive 2,000, canceling each other out. So that's really going to leave us with Wednesday and Thursday to sort of read into a little bit further. I would say it was fine, right? Generally speaking, it was a low volume week. So to see that we were up here close to about 200 million shares on the day there, that checks out as, in my estimation, being fairly bullish. Again, remembering that it's typically a low volume time of year, the fact that we're just shy of 300 million and we're to the positive side, again, seems fairly bullish to me. The same thing in the advanced decliner. Again, not overly correlated up and over 2,000. However, respectable reads coming off the zero line, trending higher throughout the day and sort of closing and then continuing into the Friday session. That to me checks out as bullish. And the same thing happens down below with the ticks. You can see that primarily in the cumulative builds, we had nice solid reads throughout the day. It's not like we were back down towards zero and then flirting with negative. No, it held solid throughout the remainder of the day, and certainly just based on an eyeball test coming from lower left to upper right in your S&P 500 chart. With that out of the way, we'll take one more look at some more nuance here on our market profile charts. If you're not familiar with this one, go ahead. I got another video for you, top right-hand corner. And here, what I want to talk about is the fact that in prior videos, especially the Wednesday videos that we put out on the channel, we discussed in length this sort of 4680 target coming from the high volume area back in here from that section of the chart. And we certainly went there and some in this week's trading range. So to me, that's a fairly bullish indication. The fact that we didn't get stuck here with two-sided back and forth trade at that 4680 is fairly bullish, right? To me, it would just indicate that there aren't really any sellers here who are saying, oh, wow, I got to get in there and I got to sell the market at this high volume node. It's just like none of that occurred during this week's worth of trade. The other thing we can read into slightly here, and we discussed this on Tuesday as well, I hate to reiterate some of those points, but it's worth mentioning if you didn't see that video. Notice how our point of controls, here, yeah, it was certainly skewed towards the midpoint, but on Tuesday, left it high up in the profile. Same thing on this session here for Wednesday. And then on Thursday session, again, more middled there. However, the point of control is noticeably higher throughout the course of this trading week. It's not like we, had this big push to the upside and the point of control was down at the low of the day here or down at the low of day here, or even like, on the Thursday session, like we left it low in the profile. It's sort of in the midpoint where the meat of the trading range was. And again, that just checks out to me as indicating that, people are willing to transact at these higher prices. It doesn't really seem like there's a lot of fear or sellers present at these higher levels in the marketplace. So that's our S&P in a nutshell. Let's go back over to our SPY chart. Again, if you don't tune into the Wednesday videos, hopefully that was a little bit of something new for you. And that's what we do every Wednesday. So check those videos out. They come out, usually after the market closes. So with that being said, S&P levels to continue to watch out for. The all-time high from the extended hours session is still up there at 474.84. Generally speaking, those do not hold as the true high of any given move, the all-time high that is of any given move in the extended hours. So we would expect that to get a little bit of repair. On Friday's session, a little bit of upper wick coming from this area of resistance right here. Now, it's not the end of the world. Remember, again, we are headed into a historically low volume and flat time of the year. I wouldn't be surprised if the market just kind of does something like this, back and forth in this area, and doesn't really see a significant breakout. Now, if that happens, then fine, don't fight that. But I wouldn't be overly ambitious about a breakout is what I'm getting at. The other thing I wouldn't be overly ambitious about is a huge breakdown, right? If you think about it, who's going to show up at their desk on Monday morning after the holiday season and say, you know what, I'm going to sell everything in my portfolio, or I'm going to initiate a massive short position headed into 2022? I just don't see it as being a likely scenario. So the fact that you're going to get a lack of people who want to do that, again, to me, it just builds the case further that we do get sideways as a likely outcome for this upcoming week. Now, on any pullbacks, if it does happen, the first thing that's going to, sort of gauge the strength of the sellers here is what happens with this gap underneath us. Do we fill it? Do we do a partial fill? Do we never make it to that gap? If we don't make it there, obviously a stronger seller isn't present. If we do a half gap and then reverse out of it, again, a stronger seller isn't present. Now, if we just blow right through and head back down towards this 464, which we know is a very important level from the spike from the FOMC, then yeah, maybe there's a bit more of a stronger seller. But ultimately speaking, I would not get bearish at all in the S&Ps until that weekly trend channel that we've discussed at length now for so many weeks. Unless that starts to go, I really don't see the reason to be bearish in your S&P. So again, hopefully through everything that we've looked at today, it just doesn't build the case for a really aggressive short from a technical perspective. I'm just not seeing it, okay? So that's your S&P in a nutshell. Hopefully that was useful. Let's continue on and talk about our QQQ. Is going to be very similar to your XLK. It is about the resistance trend line. We did technically close above it on Friday, but again, based on low volume sort of float, I mean, you can see the dramatic taper down there on the volume bars. I wouldn't be overly confident in the break just yet. As I've discussed in the past, I really do still firmly believe it needs to be up and over 400 for the all-time high to be into play. So take that for what you will. I will be watching this area right here. If we do get the sideways choppy week, ideally we hold up sort of in here above that 393. But if it wants to pull back further, your line in the sand is the 50 SMA here in your QQQ. Also note that this horizontal level will be slightly below that after the 50 SMA crosses here at 388.78, and that is of course the equivalent to your FOMC spike in the S&Ps. It was also resistance on the back test. We clearly broke it right on the Tuesday, Wednesday sort of juncture there. So to me, it should hold up as support if there's a deeper pullback on the first test there. So 388.78. Anything underneath, I would really just start watching for the lows here. But again, based on everything we've discussed, do you really think someone's going to show up to the desk on Monday after Christmas, after a shortened holiday week? We have New Year's coming up. I just don't see the reasoning for someone to show up and say, you know what, I'm going to short the entire market. Huge positions are going to go on. I don't see it as likely. Okay, so those are my 2 cents on that as well. Let's continue on and talk about the IWM. This one's moving back to the midpoint of the range. We know that we had 222.50 and we're home, right? So you can see all of the interactions we've had in the past. And to me, this continues to build the case that it's not aggressively risk on or risk off, right? It goes both ways. The fact that we're in the middle here, sure, we're coming up from the bottom. It might feel a little bit bearish, but overall, we're just in the midpoint of the range. It's screaming neutral risk here in your IWM and small caps. Once again, sort of, not really building the case for an aggressive breakout or breakdown into this, holiday flat historically trading part of the year. So to me, IWM, just a sort of indicator right now, screaming neutral. Okay, that's really all there is to it in our broad market. Let's go ahead and get into our companies now. So Apple's going to kick us off here. And zooming in, what we'll notice is a great, fantastic hold of that support trend line. We discussed this in the prior video, so fantastic hold there, obviously making the rebound up to our breakout point at the 176. If you're not familiar with that level, I'll show you it on the 30-minute time frame. You can see from in here, big area of resistance, neckline from the double bottom, correct, leading to that breakout. So to me, if we can resolve this higher, so a little bit more price acceptance above, maybe even a break up and over 176.60, then to me, it's just back up to the highs, right? Apple is incredibly bullish. It's been the relative strength monster. I wouldn't fight that, right? So to me, Apple does look good for a potential move higher, maybe a day more of consolidation, then boom, some sort of break. Again, don't push it. Shortened trading, or not shortened trading week, but low volume typically trading week, historically flat. Wouldn't be overly aggressive, but this would be a name that I would sort of monitor for some bullish trade ideas in Apple. Next up, we have Netflix. This one is bearish. Remember that we talked about this resistance trend line from in the past, certainly resisting there on Thursday just a little bit, but printing as a hammer candle. So because of that structure, I would really need to see more confirmation if this is going to roll back over. I do think the short is underneath 605 to return us back down towards these lows. It's not quite all the way at that 576, so let's go ahead and throw on the more accurate target, which would be here, closer to about 584.50, we'll call it, just for round numbers sake. Again, on a break of 605, that to me looks like the likely scenario continuing this bearish downturn that we're in. But again, remember, needs to see that confirmation given the hammer candle that printed on Friday. If we take out the high, if we take out the resistance trend line, there is resistance just overhead here at 625. So I'm not sure how much you want to push your luck to the upside in this one. I would probably be more patient and wait for the break here to get us back to the daily 50 SMA and that 640 level, the neckline of the double top, and also the prior area area of resistance here. So to me, this is the juicier bullish trade in Netflix. But again, both direction based on structure here and location do require a little bit more confirmation. So please be patient in something like Netflix. Next up, Tesla, absolute monster. On Friday, we were talking about this one long. And, I'll be the first one to admit it. I actually sold at the 50 SMA. So not the greatest trade to sort of wrap up the trading year, but it is what it is. Right at this very important area of resistance. It was prior support, but then turned resistance, right? At the 1065. For now, given the nature of how we've arrived to where we're at, I wouldn't be surprised if we see a little bit of pullback and then sort of a move into the resistance trend line. Now, could it just go there immediately? Yeah, the market can always do whatever it wants, but that's going to, at least to me and my preferences, it's going to start to feel a little bit like chasing. I would prefer not to look for longs after we've been up off of, the prior all-time highs here, basically straight up 1, 2, 3 days in a row on, holiday trading volume and just not a bunch of spectators in the market. So to me, higher low pullback would be nice, and then a reattempt of 1065 to get us into that resistance trend line. From there, the juicier trade could be here to the top end of this overall range, basically this. Sure, we have some outliers 1 and 2, but ultimately speaking, your main resistance is at 1160. So that's Tesla in a nutshell. Again, I would not try to short this one just based on the relative strength it displayed over the past week and the sort of move off of this area of support, the prior highs, which we've been discussing on the channel for a very, very long time, right? So that's Tesla in a nutshell. Next up, we have Alibaba. No real changes here, just continuing its bearish little drift lower. Yeah, no, sort of some green days in here. Fine, whatever. It doesn't look overly bullish. The only reason to get bullish on this thing would be a break of the resistance trend line and probably this 122.50 to get you into about 130. We know that it's a really important level from the daily time frame a couple weeks, or excuse me, years back. 130 was a big shelf of weekly support. We're not going to go and look at it, but you can go watch some prior videos if you want to see where that's coming from. Otherwise, I would just expect sort of a slower grind lower into about 110. We've discussed that level in the past as well. Next up, Facebook, which of course is now Metaverse. I don't know if they're actually going to follow through with that, name change with, I believe it was MVRS into the new year. We'll see ultimately, but I do think Facebook is a patience play as well. And, based on everything that we're saying, again, it doesn't really make sense to push your luck too much this week. I really think that the breakout's either going to be up and over 338 to get us into that, up around 350, 150, or there's two plays to the downside, right? The first one is for you really savvy day traders, you scalpers, underneath the 2-day lows, probably flushes it into the low end of this kind of flag activity we have here. So a break of 328.30 takes you to 323.22. Anything underneath that, though, that's really the more, where there's more meat on the bone, rather, underneath that 323.22 to get us into about 309.54 coming from lows and lows in here. So those are the really two directional moves, which are going to be produced either by a break here, as we discussed, or quick scalp for this, and then, some more consolidation, and then a breakdown here does get a little bit more attractive into that 310 area down below. Overall, Facebook really, really directionless. One of the bigger, directionless movers over the past couple of weeks here, really just going sideways, getting tangled around the 50 SMA and 200 SMA respectively. So we'll continue on and talk about NVIDIA. NVIDIA here is right at its resistance trend line. So again, based on a little bit of indecision we saw on Thursday, wouldn't be surprised to see a bit of a higher low pullback. Ideally, it respects the bottom end of the prior range. It was resistance here as well at the 287.50. If that happens, a reattempt should give us the break to take us here to 308.69. After that, obviously, you're walking it up to the top end of the next range here at 333.45. But again, nothing about this chart would suggest that this will be the target into the upcoming week. For now, I would be patient. I would wait for either a higher low pullback and a reattempt, or just watch for it to break sideways through time, right? That could also very well happen. The only way to get bearish on NVIDIA, and I will continue to maintain this now, is underneath this gap, okay? If that happens, sure, we're looking for about 250, but as of right now, remember how we talked about, this breakdown giving us this low? It complicated things. Now the short wasn't just underneath the range from in here because we had this low. So if we were going to move, it had to take out the gap as well. And certainly this week, it respected the gap and moved higher. So to me, the only larger short in NVIDIA is underneath 267.82, filling the gap and closing underneath to get us to 250. And again, I'm just not seeing that as a likely scenario either. So NVIDIA, again, patience play based on our location, based on the structure of what printed on Thursday's session. Let's continue on here and talk about Microsoft. Really just a bullish one as well, taking, a double bottom here and moving right to the bottom of the gap. Now, we did pull back a little bit off of it on Friday. And again, just like some of the other stocks that we've looked at so far, it's been up 3 days in a row fairly aggressively. Any pullbacks this time around need to hold 329.25 coming from the lows from right around in here. Higher low pullback, also respecting the daily 50 SMA. Fantastic. A reattempt here. Look for the gap to fill, and then the top of the range at 342.39. Again, would I push my luck here and really bet aggressively on it going to the top immediately? No, right? I would want to see the structure start to unfolding. I would want to start to see, is volume coming in, even though it's supposedly going to be a light volume week. If there is volume coming in and a lot of people are paying attention, then fantastic. You know that this is one of the ones to be watching, right? This is where the eyeballs are, and you want to participate in that, not where the eyeballs aren't, right? So that's just, a quick little tip there on any of the stocks that we've covered. If you notice that yours is the one with a lot of volume coming in, then fantastic. It looks like you've, pretty much made the correct choice in what to be watching, okay? So that's really all there is to it in Microsoft. Again, just like NVIDIA, don't really see the opportunity for a larger short until we start taking out these lows at the double bottom. Sure, there could be pullbacks, intraday scalps on the way, but I don't think there's a reason to be thinking bearish until that actually happens. Next and lastly, we're going to wrap the video up here. Again, we're not going to do any additional trade ideas this week, is Amazon, the beast here. And just like Facebook, maybe this one is a contender as well for the most sideways stock we've seen over the past couple of weeks. I mean, really just can't get out of its own way. We've discussed this in the past, how this range right here is ultimately going to dictate what Amazon does. If we take out the top, we're just moving into these 3-day highs at 35.40. If we take out the lows back down here towards this double bottom 1 and 2, around 31.76. As of right now, we have 2-day highs, so sure, there could be a little bit of a breakout point up and over that area at 34.40. So maybe you want to put that on your radar for a quick, scalp into that 34.60. So 20 points in Amazon, yeah, it's something worth trading for with options especially. It's also going to be the daily 50 SMA, so I wouldn't really push your luck over it. Maybe take off like half the position, hold half, see if we do get that follow through to the upside. If not, no big deal. Stop out the rest, break even. If it does want to turn around off the top end of the range being defined as that area which we just discussed. If it comes all the way down to the bottom, is it worth fishing for longs down here? Again, I don't know. It would really take some more context based on the type of week that we're seeing. Is the rest of the broader market bullish? Is the rest of tech bullish? Is everything sort of falling apart? If it is, and by is, I mean if everything is falling apart, probably wouldn't be fishing for longs here. I would rather be watching for a lower high, reattempt, breakdown, right? So something like that. So there's a number of things to be watching for on Amazon, given the fact that we are in a range. But as of right now, sure, we did come up from the bottom. We are looking to put in some bullish consolidation. You can see a nice 2-day high in here, nice upper bar consolidating in the upper range of the week. So yeah, maybe you start to treat it as a bull flag, but again, patience is probably required. That's really going to wrap up the video. I hope you all had a fantastic holiday sort of weekend, regardless of what you celebrate. And I also hope you have a fantastic new year. I'll probably check in on Wednesday with another quick update. Again, not going to push it with trade ideas, but that is what it will be. So if you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked in the description. And with all of that being said, I wish you a green trading week.